I'm 680 News Senior Business Editor Mike Eppel. Mess on the markets today. Another one of those days, we could say, as stocks sold off early and often, and we saw the U.S. benchmarks, the Dow, the S&P, and the Nasdaq all turn lower, albeit briefly, for the year, whereas the TSX is now down by about 8% for 2018. Most recently, it's been damage done in the technology sector that has pulled the market sharply lower, with investors selling these stocks, even though the companies are still making big profits. But it's what have you done for me lately? And the worries that 2019 could see a slowdown. From its peak of $233 per share in early October, Apple has dropped more than $50 a share since, losing 21%. Facebook's down by 39% from its recent records. Facebook stock is down now to a 2-year low. Amazon down 20%, Netflix down 36%, and Google and its parent company Alphabet down by about 22%. Now, what to do about the energy market? Price for oil today hit its lowest level in a year, falling below $56 per barrel U.S., and the Canadian crude index today was down as much as 12% on an oversupplied global market. We'll call it a supply glut, because that's what it is right now for investors in the energy trade. Big questions in Alberta about whether or not to cut production. Some debate about that. The government bringing in experts to discuss the idea of a production rollback, but a lot of the energy producers are saying let the market decide where the price will go. Shares of the Boeing company down for a 9th session in a row today, tumbling after the company canceled a planned conference call with airlines to discuss the new operating rules for its 737 MAX jets. This follows the crash of a Lion Air 737 MAX a couple of weeks back, and some questions being raised whether or not Boeing did enough to alert pilots about some of the new systems in that plane. And despite the forecast for a strong holiday season upcoming, the retailers haven't done much of anything other than to see their stock prices decline recently. Today, Target in the U.S. was in with strong earnings, a 49% increase in e-commerce sales over the past year, and still, company stock price tumbled by as much as 14%. Again, on concerns that these companies are going to have to spend a lot to attract customers for the holiday sales season, and also taken lower just by the overall mood of the market. From the 680 Newsroom, I'm Mike Eppel for City News.